All right, folks, let's do this. My name is Eric Wilkinson. This is Pro Trader Strategies, and we are spotting the trade before the open. All right, so what I like to do in these videos, folks, is talk about the economic data, see how that's impacting the overall markets, and then we'll talk about some option strategies that I'm looking at to implement into my portfolio. So without further ado, economic data, pretty light today. Something to keep in mind, we have a ton of Fed governors speaking this week. We've had Powell, we're going to have Williams, Clarida, Yellen, just about everybody under the sun that can speak will speak probably this week and next week. So we got some of the notes out of the last meeting, the minute notes, and it was looking like Powell was very hawkish, if you will, looking at inflation, and then it started going back and forth, whereas we're seeing some of this inflation come out, and it looks like it's going to be a little bit more lasting than just transitory, which is what Powell was originally talking about. The reason why I don't think that we're going to see transitory inflation here, folks, is because we're seeing wage inflation pretty dramatically across the board in most businesses, especially hiring minimum wage folks, all right? So with that wage inflation, that never really comes off again. So that will be there to stay. So a lot of these inflationary pressures that the Fed was talking about, well, these wage inflationary pressures could hold on to inflation or keep inflation here for a longer period of time. So that's one of the big kinks in the cogs right now. And that has caused folks to think, well, with this Omicron variant, that is coming out of South Africa. Now, something to keep in mind, more and more information coming out about this variant, the Omicron variant. A lot of these variants are coming out of Africa, South Africa, and areas in that continent. And the reason why is because there's so many people that have immune deficiencies, and most of it due to HIV. I think 80% of the folks there have HIV. So they are immune deficient, if you will, and that seems to be the place where these viruses are mutating. Okay, so that coming out, that means it's going to be very difficult to get rid of this. Now with these variants, it seems like that they are not as lethal as the original. So that is a good thing, a silver lining, if you will, but it is more contagious, if you will. And something else to note about these variants that I wanted to talk about, and I kind of forgot just now. Maybe it'll pop back into my head with the variant. I can't think of anything right now. Got a bit of a brain fart anyway. Anyway, before if you guys have anything you want to talk about, throw it over there in the comment section. Make sure you guys are driving this content, all right? And if you get a light bulb moment, please smash that like button. So a lot of that having to do with the lockdowns. That's with the variant coming out. That means folks are worried about more lockdowns. That is making the markets overall pull back. We've got inflationary worries. Utilities are probably going to hold on to a little bit. FANGs maybe are somewhere where you can find a safe haven trade there. But for the broader markets, even crude oil here cracking under the pressure of the markets, worrying about a slowdown here. Look, trying to share my screen here. You can see yesterday, it looked like this, we talk about this little candle here. And generally speaking, I would talk about that candle as being a bit of a low area for the markets. Now this, my marker thing was bugging me all day, and now all of a sudden it's disappeared. There we go. So when we're talking about sorry, are you going to give me a marker? All right. Anyway, this candle, sorry guys, for some reason, why is my highlighter, I got my pen on. Let's just make sure I got some color here. All right. There we go. I don't know why that pen doesn't seem to want to work. It seems like it's trying to work. Anyway, I guess I'm going to have to give up on it. It doesn't seem to want to work. Anyway, that bottoming pattern usually needs to come down a little bit below this previous day's low to make that really a bottom. So I would not consider that necessarily a bottom. And besides that, today, just erasing any hope of that being a bottom today with this candle. So it looks like we're going to easily test the point of control here in crude oil. Now we've got the bonds moving higher. Why? Well, if this isn't transitory, we're probably not going to have a whole lot of wiggle room to raise interest rates because the lockdowns and all of that, slowing economies, they don't want to raise interest rates. I think they're well behind the curve. They probably should have done that last year coming out of that because we've suppressed these interest rates so long, gotten money flowing, and during that time, they kept interest rates lower. They should have probably been raising interest rates going there. Bitcoin making a move to the upside. We're going to expect to see something like that in gold as well. Some strength there with the possibility of a weakening dollar, inflation. All of those things will drive that market higher. VIX, we're seeing a little bit of weakness off of the open. It is still higher, but across the board, equities are looking pretty rough today. Yesterday, one would normally look at these two candles back to back and think that that is a reversal because the green candle engulfed the previous day's candle. That is a very bullish sign, but today we're getting this bit of a topping. Now, would tech probably weather this storm a little bit better is where I'm looking. You can see here, Dow Jones Industrial Average is kind of in that same camp. Coming back down to the point of control here, it should find a little bit of support on that 200-day simple moving average, but because the point of control is right there, it is going to skew that a little bit. Most people will be trading off that aren't using the point of controls, but when you have that point of control right here, you can see that that's where value is accepted. And if value is accepted there, we will continue to see the market just kind of flutter in and around there. So with that 200-day simple moving average there, that's really going to get negated because of the action that has preceded it, all right, meaning the time and volume trading around that area. So if those are things that made that light bulb go off, smash that like button for me. Share that content with some folks. And if you want to talk about anything, throw it over there. I'm keeping my eye on it. I keep glancing over there to see if anybody's chatting. E-mini S&P is negative on the day. Again, as you can see with the breakdown here overnight, omnivariant breaking out. Powell's notes yesterday causing a little bit of weakness. You get a dead cat bounce. That's what I was talking about yesterday. Are we going to get a dead cat bounce with some of these markets? Well, with the Dow Jones, you can see that's what I'm talking about. You get a big sell-off, a lot of heavy selling. What happens the next day? You get a dead cat bounce because people, the early folks come in and start buying. That gets the market to have a little bit of a move to the upside. And then today, that's why we talk about turnaround Tuesday. We turn those hands around, and that's what we're seeing today, turnaround Tuesday, and the hands are selling today, causing that weakness. But going back down to the point of control is not a terrible thing here, folks. We're going to be looking for it to settle down around that area. So I don't think it's a terrible thing for the sell-off. Something to note also, when we've had this type of sustained rally in the past, what we generally see heading into December and to the end of the year is a lot of this all these corporations are going to be throwing money at the stock market. Why? Because they want to keep these values in their portfolio high so that it looks good for window dressing at the end of the year. Now, have we started seeing some weakness ahead of that? You might actually see some folks covering some of those positions ahead of it, and then that weakness happens. But heading into December, that is looking to be more strong or more of a bullish trend because of the sustained rally we've had in the past. Those folks are going to defend their positions, and I think that that's what's really going to hold this market up heading into the end of the year. I don't think that we're going to necessarily blast off to the upside or really have a major correction, but more and more, I think we're going to see people shore up their positions and overall try and defend some of those ones that are looking good, dump the ones that are bad. All right, so that's what we're going to see. A bit more volatility possibly, but not necessarily making incremental moves to the upside or downside. That's the way I see this month playing out going forward. Now, Later on this month, or this week actually, we get the non-farm payrolls. That's going to give us a real indication as to how the economy is doing with this reopening. Folks are trying to hire everywhere and not able to get those workers in there, especially for minimum wage to do those jobs that we were normally accustomed to filling rather easily. All right, so that's about it, folks. That's all I got for you guys. Stay tuned. Later on this week, we got a couple of great things for you guys set up. So make sure you guys are subscribing, hitting that little bell right next to it. The bell gives you the indication that I'm popping in here, possibly unannounced. So make sure that that bell right next to it is clicked on all so that you will, hey, he's on there talking. All right. So make sure you got that going. All right. That's all I got for you folks. Can't take that. Take it easy.